we need to write a memorandum to the financial accountant of Small 5 Limited in which you critically evaluate his calculations related to the impairment loss. Okay, so guys, important. First, you need to include your format. This is your easy mark on a new page. To the financial accountant, from, student, date, subject, calculation of impairment loss of cash generating unit. And then, as always, start off by indicating, dear sir, please find attached or please refer to Appendix A, a critical evaluation of your calculation of the impairment loss of the cash generating unit. If you have any further inquiries, please contact me on XXX. Yours faithfully, student. Now, why do we do this? Immediately, once you have included this, you know that most probably you will be able to receive your communication skills mark. But you will have to refer to your appendix and then on a new page or the next page, include appendix. And this is where we will discuss the impairment test. But it is important, have a format, know what to do. Then my next step, I have already included my memorandum. Guys, you need to know the principles. If you don't know your principles, this is where you now need to open your IFRS contents page, and then from there identify the principles on how to calculate the impairment test on your cash generating unit. Okay, they indicate to us we must only address the aspects that have been incorrectly dealt with. Therefore, where do you start? My recommendation, from the given scenario, when we look at the question, I will start at the top. When you look at this, the first two paragraphs, background info only. Third paragraph indicate to us that we have a CGU. Now guys, due to the fact that they've made use of this abbreviation in the given scenario, I will make use of this in my solution as well. But my recommendation will still be that you indicate to your marker that CGU means cash generating unit. Then they provide us with the fact that on 31 December 2018, calculations in terms of our impairment test. On the right side of your screen, I want you to imagine that this is my appendix page and I'm going to include my discussion on the right side of your screen. Now guys, you have the solution in front of you. I'm not going to make use of full sentences. Remember, you will not receive any marks for purely indicating or including theory. What I'm going to do, guys, or what I have done in the solution, when you have discussed theory and you have applied this, you receive your marks. But if you only include the theory but you do not apply this, you will not receive any marks. Okay. Therefore, you need to ensure that you understand the application section. Now, when we look at this, where do we start? My personal process, number one, I will first look at the schedule, or in this scenario, the budgets that they've provided to us, the extrapolation per year. And I will discuss this. And then secondly, I will work through the notes per line item, 1, 2, 3, 4, and so forth. Now, when we look at my first step in terms of the schedule, we have already identified that they have provided us with 7 years. But guys, normally we only use 5 years. Therefore, IFRS indicates to us that we may only use a period longer. Now, I'm going to write this down. We may only use a period longer than 5 years if it can be justified and performed with great accuracy. Therefore, it has to be accurate. It has to be correct. Therefore, guys, they have made use of this up until year 7. Therefore, yes, they can do this. But they need to indicate to us, how did they do this? Did they extrapolate year 6 and year 7? We don't know this. But yes, if they have performed this, they can. But when we look at this, what is pretty interesting, when you compare 20.23, guys, the net income on sales, this is 1815 to 241784. This doesn't look like an extrapolation. Okay, therefore, guys, I will indicate based on critically assessment, if they want to make use of year 6 and 7, they need to indicate to us how did they calculate this in detail to ensure that it is accurate. And then what is important is that we can make use of these years if this is still within the useful life of our asset. Remember, critically discuss what is incorrect. They didn't provide us with sufficient details in terms of year 6 and 7. Therefore, guys, when you look at my steps, left side of your screen, I have now looked at my schedule briefly. I now need to refer to my notes. Now let's refer to note number 1. Revenue. Guys, pretty straightforward. I can't identify any issues with this one. Therefore, I'm not going to include any discussions in terms of this. Rental income on investment property. Now, when you think about this, guys, investment property can generate cash on its own. Therefore, this cannot be part of our cash generating unit. Therefore, our rental income cannot be included in our value in use calculation. Repairs and maintenance, the day-to-day service costs. Yes, guys, this is in terms of our current condition. Okay, so let me just include here. Yes, this is fine. Repairs and maintenance, fine. Now, depreciation. Depreciation, guys? No, why not? Because depreciation is not cash. Therefore, this cannot be included. And a very important one, we need to include our amount for which this asset will be sold at year end. We need to include the 350,000 at the end of our period, and they did not include this, but they should have, therefore incorrect. Improvements that are incurred, guys, no, why not? Because we need to determine this based on the current condition of our asset. Therefore, we cannot include the improvements. You will identify that I have included a date 20.18. Now guys, let me just quickly read through paragraph 6 with you. Restructuring. All of the cash flows in respect of the planned restructuring that are included in the cash flow projections have already been included in a provision for restructuring in accordance with IAS 37. Now, when you think about this, if this is what they have done, debit our expense, therefore this is already included as an expense in 20.18, and credit our provision. Therefore, guys, they can't include this again in 20.19. When you look at this, guys, our restructuring, this 1 million, they can't include this again if they have already included this in 20.18. Therefore, first thing, which you know, your normal knowledge, guys, you know that we cannot include our restructuring because we need to calculate this based on the current condition of the asset. But now they indicate to us in this scenario that they have already recognized the provision. And this provision is included the expense in 20.18. Therefore, this is incorrect. We cannot do this. Okay, guys? You can refer to paragraph 43b in terms of this. Now, important, because they are already committed, because they've already recognized the provision, already been included as a provision. The standard indicates to us that we may include our savings because they are already committed to a payment that they need to make. Therefore, we may include the savings, this 220,000 per year. Great. Number 7, the machine. Now guys, I'm pretty sure we can debate about this paragraph. During September 2018, Small Limited began installing a new machine. On 31 December 2018, the machine was not yet available for use as intended by management. According to the project's team's budgets, costs of 550,000 will still be incurred during 2019 before the machine will be available for use as intended by management. Okay, so guys, we can debate about this one in terms of the fact we need to look at its current condition, guys. Then no, we cannot include the 550,000. But again, guys, they've started with the installment process. Is there an obligation to complete this? If yes, then most probably we need to include the 550,000. You will identify, guys, this is not included in our solution, but to be very honest with you, I think this is something that we can discuss and we can debate. Deferred tax. Guys, the standard indicates to us, no, we cannot include the movement in our deferred tax. We cannot include our current tax. Number 9, they have used an after tax rate. Incorrect. No, you cannot use an after tax rate. You need to use a before tax rate in terms of our standard. When we look at the calculation, guys, the standard indicates to us that in terms of our fair value less cost to sell calculation, we cannot take into account our taxes and interest. Therefore, this is incorrect. They cannot take into account the 230,000. And when you look at the calculation of our recoverable amount, this should be the highest and not the lowest. However, in this calculation, it's pretty confusing though, hey guys? But you need to write this down, that they are confusing us. This guy doesn't really know, is it the lowest or the highest? Therefore, this must be the highest. And my recommendation, take this one step further. They have calculated the impairment loss, but what do they now need to do with this? You need to indicate that they need to allocate this first to goodwill. Then secondly, in terms of the carrying amounts of our assets, pro rata. And guys, now you can conclude and you are finished with your appendix. Remember, when you look at the solution, I have included the theory. But guys, you need to apply the theory to be able to receive the marks.